All right, today we're putting on our detective hats. We're going to go on the hunt for a clue that's hiding in plain sight in the financial markets. A clue that can help us follow the smart money by cracking the code of trading volume.
I mean, just imagine for a second, what if you could actually see the moves of the biggest players out there, the ones who can really move the needle? It'd be a total game changer, right? Like having a secret map showing you where the real action is?
Well, it turns out they do leave a trail. They can't help it. They leave a fingerprint on the charts with every major move they make. And that hidden clue, the key to this whole thing, is trading volume.
Okay, let's dive right in. Section 1. What in the world is trading volume? We're calling this the market's first clue because, you got to know what you're looking for before you can solve the mystery.
In the simplest terms, trading volume is just the number of shares that change hands on any given day. Think of it like the market's pulse. A really high pulse means there's a ton of activity, a lot of interest. A low pulse? Well, things are pretty quiet, and there isn't much conviction out there.
Now, let's clear up something that trips a lot of people up. A lot of folks think that if someone buys 100 shares and someone else sells 100 shares, the volume is 200. Nope, that's not how it works. A single trade of 100 shares, that's one buyer, one seller, counts as 100 in volume. It's just one transaction.
And that big number you see at the end of the day? It's cumulative. It just adds up. As this table shows, the volume from 9:30 in the morning gets added to the volume at 10:30, and so on and so on. The final number is just the grand total of every single trade that happened all day long.
So let's move on to Section 2 and see how this all connects. This is where the real detective work kicks in, because we're about to start decoding the clues by pairing volume with its partner in crime, price.
And this is absolutely crucial. Just knowing that a stock traded 1 million shares today, that tells you nothing. It's like this quote says, volume by itself is pretty much useless. It only starts to tell a story when you look at it alongside what the price is actually doing.
So what do we mean by high volume? Well, a really good rule of thumb is when today's volume is way higher than its 10-day average. A big spike like that is a huge signal that the big institutions, the heavy hitters, are getting involved. They just can't hide a footprint that big.
And here's a perfect picture of it. You can see the volume for the last couple of days is just kind of hanging out around that 10-day average line. But then look at today's volume bar. It's soaring past it. That spike, that's our signal. That's the alert we've been looking for.
All right, Section 3. This is the main event. We're decoding the 4 scenarios. We have our 2 big clues, price and volume. Now it's time to put them together and crack this case wide open. Okay, scenario number 1 is the classic bullish signal. This one's the most straightforward. You've got the price going up, and it's happening on high volume. When you see these two together, the market is shouting a pretty clear message. So, what's the takeaway? It's simple, really. The price is going up because the smart money is buying, and they're buying a lot. Their conviction is what's pushing that price higher. That move is the real deal. It's strongly supported. Now for scenario 2. Here, the price is also going up, but wait a minute. Look at the volume. It's low. It's below average. This is when your detective senses should start tingling. This right here is a reason to be cautious. So why the caution? Because a price rise without that high volume suggests the big institutions are sitting on the sidelines. The move is probably just being driven by smaller retail traders. That means the trend is weak and it could fall apart pretty easily. This is what you'd call a classic bull trap. Okay, let's look at the flip side. In our third scenario, the price is dropping and it's happening on high volume. This combination, well, it's a powerful bearish signal. The logic here is pretty clear, right? The high volume confirms that the big players are actively selling off their positions. Their selling pressure is what's pushing that price down with real force. This isn't just a drift lower, it's a decline with conviction.
And on to our final scenario. Here, the price is decreasing, but it's happening on low volume. Just like our second scenario, this is another one of those times where you need to tap the brakes and not jump to any conclusions.
So the big takeaway here is that the price is just kind of drifting lower without any real oomph. The smart money isn't aggressively selling. This means the downtrend doesn't have much conviction, and it could reverse. This might be a bear trap, a false signal that traps sellers on the wrong side of the trade. Okay, on to our final section. A trader's confirmation tool. This is where we take everything we've figured out and put it into a practical, useful detective's toolkit. See, you almost never use volume all by itself. Its real superpower is as a confirmation tool. Picture this. First, you spot a bullish candlestick pattern. That's signal number 1.
Second, you see it happening right at a key support level. Okay, that's confirmation 2. Then, you glance down and see a huge spike in volume. That's it. That's your triple confirmation, telling you the smart money is on the same page.
So this brings us to a nice, updated trading checklist. You find a pattern you recognize, you check it against support and resistance, and then you use volume as the final tiebreaker. Is there high volume backing you up? Awesome. But if the volume is low and weak, that's a huge sign to maybe hesitate and wait for a better shot.
And that's pretty much it. You now have the key to decoding one of the most useful clues in the market. You know how to spot the fingerprints of the big players. So the real question is, now that you can spot the smart money, what are you going to look for first?